Have you ever taken a trade right at support or resistance only to watch it move against you almost immediately? Like really annoying. This is Vic with your weekly trade video for Friday, July the 31st. So if you've done that, you're definitely not alone, I can tell you that. In fact, it's one of the most common mistakes that traders make. The surprising part is that the support or resistance level usually isn't the problem. The problem is how traders use those levels. Really important to learn this. In this video, I'm going to show you a real example where the support level was excellent, but according to our trading rules, it wasn't a trade we would have taken. And this is exactly why having objective rules can keep you out of unnecessary losing trades and help you become a much more consistent trader. By the way, this happens to be a short-term trade example set up and using the appropriate time frame combinations. It doesn't matter. The whole concept of using support resistance the way that we do is identical no matter what your trading style is. Same process, right? So let's start by having a look at the 4-hour chart. Okay, so this happens to be the British pound US dollar pair. It doesn't matter. It's the same thing. It has nothing to do with it. It works on any pair. Price comes down. You can see right here, price as after this big rally has come down and fallen into this green line that I have drawn here. Why do I have that? Because that's a very strong support area. Look at it. Look what it did. Like after it broke through and established here, it tested it once, twice, 3 times, just about 4 times here, and came down again. Okay, this is a strong support area. It's a level where buyers have stepped in before. So naturally, a lot of traders are going to be watching it. And here's where the mistake usually happens. Many traders see price reach support, like right down here, and immediately buy, assuming that the market has to bounce because it did every other time. Unfortunately, that's not the way things happen. That markets don't work that way. Support, listen to this, support is simply an area where a reversal may occur. It doesn't have to. It might occur though. It isn't a signal to enter a trade. So what we do, when price hits these support levels, now we drop down to the 15-minute chart. Let's do that. Down to the 15-minute chart. Here we go. Here's that drop down into that support level, right? This is where our trading decisions are actually made. Notice what price is doing as it reaches the support level right here. Okay, even though the location's excellent, we already saw that. We never received the price action that our rules require before entering a trade. We use swing break patterns. We've shown lots of these in our videos. Could the market still bounce? Absolutely. That's not the question that we ask. The real question is, has the market given us permission to enter? In this case, the answer is no. There is no pattern that we're looking for. And that's why we just simply stand aside on a trade like this. And this is one of the hardest things for newer traders to do. They worry about missing the trade. That FOMO feeling. Professional traders think differently. We'd rather miss an occasional winning trade than repeatedly take low probability trades that don't meet our rules. Because remember, the goal isn't to catch every move. Nobody catches all the moves. If they tell you they do, just run the other way. That's not true. Our goal is to consistently take only the trades that fit our trading plan. That's what removes emotion from the decision-making process and helps create consistency over the long run. If there's one lesson to take away from this video, it's this. Support and resistance identify where to look for a trade. Price action on our entry time frame tells you when to take it. Without confirmation, support and resistance are simply areas of interest. They are not automatic trading signals. If you'd like to learn more about how we use objective price action rules to filter trades like this, you can check out the links in the text below this video or in the email that you received. Thanks so much for watching. We really appreciate it. See you next week with another weekly video. Take care.